The stock market has experienced significant volatility recently, and Tesla has been one of the focal points for investors and analysts alike. As of December, Tesla's stock peaked near $265 per share, but now the question on many investors' minds is whether it will drop to a level where it can find a true bottom and start its ascent again. Experts like Mark Newton from Fundstrat, a well-known name in the investment community, have made predictions that could lead to a major rally for Tesla's stock. Newton believes that if Tesla's stock price can push past that critical $265 mark, it could spark a surge that would take it to even higher levels. This is not just Newton's opinion. His views align with the broader consensus at Fundstrat Global, co-founded by Tom Lee, suggesting that this level could be a key tipping point for Tesla's stock. This is definitely something for investors to watch closely, as it could present a significant opportunity. Before we get into the details of the technical analysis, make sure to like and subscribe to stay updated on Tesla stock news and other investment insights. Let's dive deeper into the technical aspects of stock market movements and how they apply to Tesla. Many traders use a tool known as technical analysis, which helps predict future stock price movements based on past trends. It's important to note that stock price movements are not always a direct reflection of a company's fundamental performance. Even when a company is doing well in terms of earnings, its stock price may not always reflect that immediately. Sometimes prices can stagnate or even dip before they start to rise again. This type of price behavior is typical for stocks like Tesla, and understanding the underlying market trends can give investors an edge. Experts have identified a potential low for Tesla's stock around $164 per share. If it dips to this level, some analysts believe this could be the first true bottom for the stock, which would then allow for a solid recovery. There's even a chance that Tesla's stock could dip further to around $143 before it finds its way back up. This type of market behavior is typical of stocks that go through large cycles of volatility. It's a lot like riding a roller coaster full of ups and downs, and that's precisely what we're seeing with Tesla's stock movements. This type of analysis is crucial because it provides insights into potential buying opportunities. Even in a volatile market, there are patterns that can help predict future movements, and investors need to understand when to act. Technical analysis includes examining different types of stock price movements, such as trends, momentum, sentiment, and cycles. Many of the predictions surrounding Tesla's stock movement rely on the understanding of these factors. For example, analysts use Fibonacci levels and cyclical patterns to help determine when the stock is likely to experience significant movements. Earlier in the year, there were predictions that Tesla's stock would hit a low point around March or April, and so far those predictions have aligned with the stock's movement. Now, after experiencing a dip, Tesla's stock is in a much better technical position, which points to a stronger and more positive outlook for the future. One of the key patterns that analysts have been watching is the concept of consolidation. Consolidation occurs when a stock price moves sideways over a period of time after experiencing a downtrend. Think of it as a deep breath before a major price jump. When a stock price stabilizes like this, it often indicates that the stock is gathering strength for a potential upward movement. Tesla's stock began to break out of a downtrend back in November 2021, suggesting that it might be gearing up for a significant leap forward in its stock value. The stock has shown signs of stabilization and consolidation, which could indicate that the next phase of its journey is poised for higher levels. This is especially important for investors who are looking for opportunities to enter the market at favorable times. Now, looking ahead, there is growing anticipation that Tesla's stock could reach the $300 mark. Analysts are using advanced tools to track and predict stock movements, one of which is the Cycle Finder tool. This tool helps predict the rhythms and patterns in stock prices based on historical data, giving investors a deeper understanding of when to expect price movements. Currently, analysts are spotting a slight rise in Tesla's stock, which is expected to be brief, followed by a short pause. After this pause, the stock could climb higher, with the potential to see significant gains. This is an exciting prospect for Tesla investors, as it points to a potential surge in the coming months. Mark Newton, who has been monitoring Tesla closely, remains bullish on the stock. Despite recent challenges and market fluctuations, Newton believes that Tesla is not only recovering but is also strategically positioning itself to surge ahead. Tesla's ability to break through key technical indicators, such as the pink line cycles, further supports this positive outlook. These indicators suggest that Tesla is in a strong position to make a comeback and potentially surpass its previous highs, which would be great news for long-term investors. Now, let's shift our focus to a fascinating phenomenon in the stock market: the behavior of stocks during election years. You might expect that the uncertainty surrounding elections would make investors hesitant and the stock market volatile, but the reality often defies this expectation. There is a phenomenon known as the wall of worry, where despite all the election-related uncertainty, the stock market often climbs. Investors continue to invest, pushing stock prices higher even when there is significant external uncertainty. From August to November, during the thick of election season, markets might show signs of consolidation. But once the election outcome is decided and the uncertainty is lifted, we typically see a strong rebound in stock performance, as investors breathe a collective sigh of relief. This trend could apply to Tesla as well, especially if the stock price continues to consolidate in the lead-up to the election year. After the election, there's a good chance that the stock market, including Tesla's stock, will see a rally as the uncertainty clears. This could be a key factor for investors to watch, especially those looking for a time to buy into the market after the election cycle concludes. Let's also talk about the economic indicators that affect stock prices, such as the dollar and interest rates. The Federal Reserve plays a crucial role in determining the direction of the stock market. There's anticipation that the Fed may start cutting interest rates as soon as September, which would lower borrowing costs and potentially boost stock prices. Lower interest rates tend to make borrowing cheaper, which encourages both consumer spending and business investment, ultimately driving stock prices higher. However, long-term economic cycles suggest that we might also be heading into rougher waters, with some analysts predicting signs of weakness next year, possibly leading to a recession by 2026. This longer-term economic cycle serves as a reminder that while the market reacts to immediate changes, it is also affected by underlying trends and broader economic conditions. For Tesla, the outlook remains particularly bright. Market forecasters are optimistic that Tesla's stock could see significant gains, potentially reaching all-time highs between this November and next spring or summer. Investors who hold on to their shares or consider buying more now could be well positioned for substantial returns if the stock continues its upward trajectory. If you've been keeping an eye on Tesla and are looking for an optimal time to buy, here's a tip. If you see Tesla's stock price hovering between $222 and $225, that could be a prime buying opportunity. When the trading volume increases significantly and the stock price starts to climb, it's a positive sign that the stock could continue to rise. This type of volume expansion during a breakout is often seen as a bullish indicator. Additionally, if the stock price consistently holds above support levels like $233, it's often a sign that the stock is poised to climb higher. For Tesla investors, the future looks promising. Technical analysis tools such as the MACD and RSI indicators are showing bullish signals, suggesting that the stock price is likely to rise. While there may be a slight dip in November due to market weaknesses, overall, the technical outlook suggests that Tesla could climb to new heights. So if you're holding Tesla shares or thinking about buying more, this could be an exciting time to make moves in the stock market. That wraps up our deep dive into Tesla's stock movements. From the critical $265 target to the anticipation of a potential surge in Tesla's stock price, it's clear that there are exciting times ahead for Tesla investors. Whether you're holding shares or considering entering the market, the upcoming months could present significant opportunities. What do you think about these predictions? Are you planning to buy Tesla shares, or are you already holding some? Share your thoughts in the comments below. If you found this video helpful, don't forget to hit the like button and subscribe for more updates. Thanks for watching, and we'll see you in the next video.